Hi, this is Mark the Meerkat Suffron in for Des for the weekend report for the first weekend in June 2012. Well, it was a bloody day on Wall Street on Friday. The SPX dropped the most that it has since August of 2011. That's in 10 months, the worst down day. I mean, if you look at the numbers, it's nothing but blood here. We've got the Dow Jones Industrial down 2.2%, the SPX down 2.4%, the Nasdaq down 2.8%, and the small caps down 3.2%. And look at Bank. Look at Bank down 3.8%. It led the way down. Very, very sign, ladies and gentlemen. The VIX was up 10%. That's a lot more than 3x times these numbers here. Gold and silver up substantially. And then oil was down substantially, and then of course the dollar was down, which sometimes is opposite. And for our grads out there, the 2.2 was the trend. So we know what that could mean. So take a look here at the daily SPX. We not only blew through this bear flag that we had, it also blew through the 1300 line of support, through the 200-day moving average, and it even closed below that. This is actually, in 2 days, has fallen more than the prediction would be for this bear flag. So what are we looking at next as far as lines of support? We're looking here at a very slight one. Oh, it's actually below that one there too. Next could be the 1265 area, and then next could be the 1241. But there's something very interesting going on. It's forming another pattern here, actually a bullish pattern. It's now forming a falling wedge from here and over to here, and if it projects out that way, you can really see the wedge forming. This is a bullish pattern. If it breaks to the upside of this, we could have a reversal going on. But to do that, we're going to have to close above the 1300 line again. Of course, that was a major line of support. It can now be a major line of resistance on the way up. And so a lot's got to happen for that to occur. Moving over to the SPY, let's take a look at a couple of things here. The MACD, as you can see, we had two strong ticks down, and it came up here almost to the zero line, is now moving its way down. If we look down here on volume, take a look at this. On the downstroke of the price, we've had an upstroke of volume. This is not good. This is like taking an airplane, pointing the nose down, and pushing in the throttle. So, yeah, a lot of bearish signs on the market. Let's look at the SPX weekly. Again, you can see the falling wedge forming here, and we're well below the 1300 line. We're now below the 50 moving average on the weekly chart. That's a bearish sign as well. And we're below that line of support. Next one could be on the weekly chart, 1255-ish area. Below that, we have the 1218 to 20 area. This is on the weekly chart. Let's take a look at monthly. So on the monthly, here we get the next line of support or resistance. Looks again at the 1255 area. And then below, next to that then is at the 1190 area. So we could fall a long ways here, folks. Or it could reverse and we could start our way back up again. We never know. Let's take a look at the Dow Jones Industrials. Here's the daily chart. It too broke through the 12300 area. It also broke through big red, the 200-day moving average, and it fell considerably below that actually. Our next line of support is right there. It's right at the 12100 area. Then next we have the 1200 area itself would be our next line under that on the daily chart. Take a look at it weekly. You know, bam, there we go. We fell down be even below again the 50 moving average on the weekly chart, a bearish sign. Next line of support around the 1190 area, 1192 to 95 area. On the monthly chart, now you got to remember, this is one day of the month here, and it's already not looking good. We've definitely on a downstroke here. Next line of support could be 1192 areas, and then 11600. Now for the Nasdaq, here's the daily chart. It just closed below 200-day moving average there, and did not quite reach the 2700 major support line that we identified earlier. But definitely this bear pullback has now completed itself and is on its way down. And let's take a look now at the weekly. Bam! We had 1 week we came up, and then now another down week. That's 4 out of 5 down weeks in a row. Let's take a look next at the monthly. So again, this 2700 area is a possible line of support. Below that we have the 2630 area, and hopefully it'll get to 2400 area. That would be pretty darn bloody here over the next couple of months. Next, take a look at the small caps. Here's the Russell daily chart, and it had been playing with the 200-day moving average for a while, and then bam, clearly closed below it, almost to this level of support from before. Now if we take a look here, we did have a head and shoulders pattern which came down, came right back up, tagged the neckline, and then is falling again now to a new lower low. So that it was a bearish pattern, and it is following through into the bearish direction. Let's take a look at the weekly. So it's almost to the level that we'd identified, the 735 area prior. Next would be the 722 area, and then the 700 area as possible lines of support for the small caps. And then on the monthly, again, I remind you that this is only the first day of the month, so there's a lot of time for that candle to form, but we already have a lower high. On this one, the next possible area of support could be the 1720 area, and then of course the 700 area. So back to the S&P 500 daily chart. We are definitely in a downtrend, and so let's not put on too many longs until we see clear signs of reversal, and protect even those shorts, because you never know, with this volatility as high as it is now, over 26, it could turn at any time. Obviously, news out of Europe is driving a lot of this drop, as well as the employment numbers had a terrible effect on Friday. But it's just additional news as to which part of the news is the market going to grab onto and react to. That we never know. We do have a few upcoming events at freeonlinetradingeducation.com, which you need to be aware of. Just go to the main page over here on upcoming events. We have coming up this Wednesday a 101 gaps and trend reversal patterns. If you just click on this right here, it takes you to a page where you can register for that. It's at 9 o'clock Eastern Time. And be sure you register even if you cannot attend, because you will get a link to the recording of that seminar. We also have coming up then on the weekend of the 16th to the 18th, the 3-day immersion Grok mentoring. If you'd like to know more about that, just drop us an email at mentor@groktrade.com. And also then the week after that, we have a live mentoring session in Las Vegas, Nevada, in which we'll sit in a room with like-minded traders and go through the mentoring program there. Also that week, we have an advanced mentoring program for those of you who are already Grok grads. So again, if you want to know more about that, just mentor@groktrade.com. So this is Mark the Mirror at Suffron. Remember to trade what you see, not what you think or feel.